Hello and welcome to the African Regional Conference 2016. I'm James King, the banker's Africa and Middle East editor, and I'm joined now by Jay Rosengard from the Harvard Kennedy School. Jay, thank you for joining us today.
Thank you for inviting me.
Now, you've just concluded some really important research on financial inclusion and mobile banking in Kenya. What were the key conclusions of that research?
I think the key conclusions are that you have what I call the unbanked majority in many countries, which is low-income households and family businesses that don't have access to formal financial services, which means they don't participate in economic growth and economic development. And what we saw in Kenya, which started a decade ago as one of the most exclusionary financial systems, within a decade becoming the third most inclusive financial sector in sub-Saharan Africa. And the key to that was the use of mobile banking, first for payment services, domestic remittances, but later for a larger basket of financial services. So the conclusion is that there's a potential to use technology to leapfrog over several different stages of financial sector development to make your system more inclusive and therefore have more equitable, sustainable growth.
Okay, so Kenya's taken great strides in the mobile banking space, but I guess the key question is what happens next and where does it go from here?
Within Kenya, what's exciting is that this revolution was led by Safaricom's M-Pesa, and they did an amazing job. So in the last decade, they went from roughly a quarter of the population to 3/4 of the population with an account, either at a bank or a mobile account. What's exciting in Kenya now is they have competition. So I'm an economist, I like competition, it means prices should go down, service should go up. And so Equity Bank, one of Kenya's largest banks, is now competing head-on with Safaricom's M-Pesa through their platform Equitel. So I think what you have in Kenya now is competition will further benefit the consumer. And the other challenge, I think, is that cash is still king in Kenya. So you see lots of transactions, but they're very small value. And about 98% of the value of transactions in Kenya is probably still in cash. Great opportunities for the banking sector, great opportunities to use the technology to increase the value, not just the volume of these transactions. And I think another challenge in Kenya is you have a whole group of traditional microfinance institutions who are now not able to adapt to this digital revolution. So their future is somewhat in jeopardy, and you want to make sure that the marginalized population that they serve will have access to the new services.
Okay, sure. Now these conclusions from Kenya are obviously hugely important. Can they be applied to other markets in Africa?
I think the key is to understand where one's market might be similar to Kenya and where it might be different. And so if you have similar conditions, for example, this great latent unmet demand for basic financial services, a very low level of financial inclusion, in Kenya's case, a dominant telecommunications provider, and a very enabling regulatory environment from the Central Bank of Kenya and the Communications Authority of Kenya, you might be able to adapt the lessons from Kenya to the specific environment of another country, but where it's significantly different, it won't work. So we have an example from South Africa where they announced that as of June 30th, their M-Pesa is being closed. And if you look at South Africa, it's much richer than Kenya. It has much greater banking coverage and much greater mobile phone access, especially smartphones. So you didn't really have the demand conditions, the supply conditions, and there were a few regulatory obstacles as well for M-Pesa in South Africa. So I think for many countries that are starting with very low coverage, it's a great opportunity. For higher income countries with very good banking coverage, I think the avenue is really the Equity Bank avenue, which is using mobile banking to extend the services of their account holders.
Okay, Jay, well, thank you so much for your time today. Thank you.
Thank you very much.